For years, we have repeatedly stated to the courts of Idaho, this is our home. We want to keep it. We have and have always had the wherewithal to keep it. We have fought and will continue to fight to keep it. We did not default on our loan or commit any act or inaction that warrants or justifies our property being taken from us or our persons being dispossessed of our property. We made every payment we were allowed to make. We were not in default on the alleged loan in February 2010 when PHH Mortgage Services began servicing it. PHH Mortgage Services is not the secured creditor, has no ownership, beneficial interest, or right to foreclose. PHH Mortgage Services has maliciously deployed a full-scale assault against our property rights and persons based on false claims and forged documents. This notice of no default is based on new evidence received in response to our ongoing discovery efforts and demonstrates no default exists. The account histories and customer activity statements referenced in this notice of no default were not prepared by us, and we comprehensively and vehemently deny they reflect complete, reliable, true, or accurate records of our payment history and escrow balances. Lending guidelines and good faith discovery requirements compel PHH Mortgage Services and JP Morgan Chase to produce true and accurate account records, notations, recorded conversations, and other such records upon request to resolve all existing disputes. However, both refused to produce this best evidence for review and analysis in violation of state and federal lending, servicing, and debt collection laws, guidelines, and regulations, and the alleged contract. Therefore, we are referencing this new evidence secured through our ongoing discovery efforts to demonstrate that even with the severely limited access we have had, these records still support the fact no default by us exists. Additionally, neither JP Morgan Chase nor PHH Mortgage Services has ever provided an original of the alleged mortgage and note to establish right to foreclose. The multiple versions of the alleged mortgage and note presented are not copies of the original and contain evidence of forgery. Multiple different chain of title narratives have been presented to the court and erroneously rendered by the court. PHH Mortgage Services did not own our property when they initiated the underlying foreclosure and does not own it now based on a fraudulently obtained void sheriff's deed. We submit JP Morgan Chase and PHH Mortgage Services have colluded together to fraudulently conceal evidentiary facts, and we deny either have cause or right to foreclose, eject us from our property, or claim injury. JP Morgan Chase confirmed our account was current and in good standing in January of 2010. Since JP Morgan Chase was the servicer and this report confirmed our personal knowledge of our payment history, we believe this to be a true and correct report of our account status. As such, we trusted JP Morgan Chase had researched and corrected any errors and deficiencies caused by misapplied payments, unnecessary forced place insurance, $2,400 to $3,600 per policy, dual, triple tracking, excessive processing fees, misappropriated funds through the improper use of suspense accounts, false claims of default, abusive debt collection, inaccurate credit reporting, escrow violations, failure to provide periodic monthly statements and research documentation, and other such inadequate and illegal servicing habits. When PHH Mortgage Services assumed the servicing of our loan in February 2010, they immediately claimed we were in default and they were beginning foreclosure proceedings. The initial alleged default amount changed from around $20,000 to over $30,000 in a matter of days when no default existed. In a good faith attempt to graciously and patiently work with this new servicer, we shared our history with JP Morgan Chase's previous accounting mistakes, but affirmed any default claims were inaccurate, created solely by JP Morgan Chase's accounting errors, and did not reflect the current status of the account or our failure to perform. We explained even though this entire nightmare had occurred during a difficult time for us, we had persistently demonstrated our credit worthiness and moral character by heroically meeting all our obligations and fulfilling our commitments, and that no default existed. Nonetheless, PHH Mortgage Services refused to accept any monies from us, investigate their bogus and outrageous claims of default, conduct any research, or provide any evidence on which they were basing their claim. Additionally, they did not provide proper notification of their alleged default or an accurate or even consistent default claim or work with us in any way. PHH Mortgage Services claimed ownership by assignment in June 2010 in order to initiate a non-judicial foreclosure. This illegal non-judicial attempt was stopped through diligent efforts and threats to PHH Mortgage Services law firm. A judicial foreclosure attempt followed, which ultimately resulted in this ejectment action. PHH Mortgage Services never sent us a notice of new creditor to inform us any debt was owed to them, nor a proper notice of default with opportunity to dispute or cure any alleged default. Only hearsay, unverified, and admitted inaccurate default claims were presented to us and the court by PHH Mortgage Services. All communication with JP Morgan Chase employees familiar with our account was terminated with the servicing transfer. PHH Mortgage Services claimed JP Morgan Chase kept all our account records, while JP Morgan Chase claimed PHH Mortgage Services was the sole holder of our account records. The rest of the story is well documented in our filings with the court. In April of 2019, JP Morgan Chase provided a payment history spreadsheet in response to a Federal Information Request, QWR. This spreadsheet is the most succinct explanation of JP Morgan Chase's inaccurate payment history we have ever been provided. It is the first payment history provided by JP Morgan Chase in 12 years of dealing with them that contains any ledger that ran from the time Chase Home Finance began servicing our loan until the time they transferred servicing, not ownership, to PHH Mortgage Services. According to this spreadsheet, 27 payments of principal and interest were due to be made during the time Chase Home Finance serviced our loan. Principal and interest were $1,760.36 per month. 27 payments of $1,760.36 would equal a total amount due on the note of $47,529.72. PHH Mortgage Services claims of default amount presented throughout the foreclosure action are in error, as we can only be held in default for payments on the note. Escrow amounts are contractually required to be collected separately after a demand for escrow and cannot be included in a default amount. This is an issue that was never allowed to be addressed in the underlying foreclosure action and severely prejudiced us by allowing PHH Mortgage Services to claim an erroneous, fabricated, and inflated default amount. Section 3, Paragraph 5 of the alleged mortgage contract states, if there is a surplus of funds held in escrow as defined under RESPA, lender shall account to borrower for the excess funds in accordance with RESPA. If there is a shortage of funds held in escrow as defined under RESPA, lender shall notify borrower as required by RESPA, and borrower shall pay to lender the amount necessary to make up the shortage in accordance with RESPA, but in no more than 12 monthly payments. If there is a deficiency of funds held in escrow as defined under RESPA, lender shall notify borrower as required by RESPA, and borrower shall pay to lender the amount necessary to make up the deficiency in accordance with RESPA, but in no more than 12 monthly payments. During the time Chase Home Finance serviced the loan, there were 5 tax cycles as shown on Chart 1. The total amount owed for these 5 tax cycles equals $8,385.36. Taxes were to be paid from the escrow account. During the time Chase Home Finance serviced the loan, there were 26 mortgage insurance, or PMI, payments from December of 2007 through January 2010. Coldwell Banker Mortgage paid the November PMI payment on October 24, 2007. 26 PMI payments of $187.63 would equal $4,878.38. PMI payments were also to be paid out of the escrow account. Per the record's reference, the opening escrow balance in the account when Chase Home Finance began servicing was $735.46 on November 6, 2007. Chart 2 is an illustration of the total amount due to be paid on the loan from November of 2007 through January of 2010. This includes payments on the note and payments transferred from escrow. As shown in this chart, and according to the spreadsheet received from Chase, the total amount owed for payments on the note and payments to escrow from November 2007 through January 2010 would have been $60,058. This next chart, Chart 3, reflects payments posted by JP Morgan Chase to our account. This account history demonstrates a total amount applied to the account of $38,794.35 and a final suspense of $67.73. It also shows a returned item of $1,980.65 on October 14, 2009, and a homeowner's insurance charge of $2,870 on November 21, 2009. This account history simply indicates the $1,980.65 payment was returned, but does not explain where this money went or who it was returned to. Since we know it was not returned to us, and no proof of return has been provided, this $1,980.65 payment, in all fairness, must be applied to the account. The homeowner's insurance charge of $2,870 is a fraud and should be credited back to the account for the following reasons. 1. This homeowner's insurance charge was later canceled, but the funds are not added back into the balances. 2. Further, this account history indicates the homeowner's insurance charge was taken from ESCO, which is in direct violation of the alleged mortgage. The alleged mortgage specifically provides for charges such as insurance to be added to the principal and could be required to be paid upon demand. 3. Previously, in the second motion for summary judgment in the underlying foreclosure action, J.P. Morgan Chase and PHH Mortgage Services claimed there was a positive balance of $3,210.01 in escrow prior to this charge, and an escrow balance of $0 when servicing was transferred from J.P. Morgan Chase to PHH Mortgage Services, which is in direct conflict with the claims of a negative balance now claimed. Number 4. Numerous other force-placed homeowner insurance policies were purchased at extraordinary premiums. The transactions are not reflected in the accounting history, presumably to conceal accounting and record-keeping errors. The scrubbing of the records is illegal and proves, among other abuses, abusive debt collection and inaccurate account records. We have maintained homeowner insurance on this property from 2002 to present and repeatedly provided J.P. Morgan Chase with proof of insurance. With these payments properly credited to the account, the new total amount applied to the account would equal $43,712.73. The payment spreadsheet also indicates J.P. Morgan Chase admits we paid through March 1st of 2009, but then unexplainably reversed 3 payments on February 5th, 2010 without adjusting the escrow account. This reversal of payments is also not reflected on PHH Mortgage Services account records. Chart 3 illustrates the dates and amounts of payments in a flow of funds into and out of suspense. This illustrative chart is based on the Chase Payment History spreadsheet, which is new evidence received by our continued discovery efforts from J.P. Morgan Chase in a letter dated April 26, 2019. The J.P. Morgan Chase payment spreadsheet is missing $16,345.27 in payments, which are later accounted for. This is a far cry from the $30,276.87 PHH Mortgage Services claims we were in default in their first motion for summary judgment. An accounting error of $1 renders account records inaccurate and requires audits to be initiated, especially when dealing with escrow transactions. It also proves the accounting records used to secure judgments are by fact and law inaccurate, contradictory, and cannot be relied upon. Any irregularity in payment dates is due to J.P. Morgan Chase's abusive debt collection and is not a reflection of inconsistent payment attempts. The concealment, misapplication, and misappropriation of these funds is evidence of fraud, malicious intent, and abusive litigation. The inaccuracies of the account records used by PHH Mortgage Services to pursue foreclosure demonstrate the foreclosure sale was based on a fraudulently acquired judgment, and any ejectment action is unlawful and unenforceable. In the new evidence provided by PHH Mortgage Services, there are 4 entries that completely cancel out the balance of lost payments. These amounts were also present in the inadmissible illustrated loan history fabricated by PHH Mortgage Services robo-witness at the time of the second summary judgment, but PHH Mortgage Services had not provided a transaction code sheet to enable us to explain and understand these amounts. We have consistently held but have been prejudicially denied our right to pursue our claim that we were current in January of 2010 based on our personal knowledge and confirmation by J.P. Morgan Chase and third parties. If you look at the transaction code sheet, you will find the following code definitions inside the payment transaction code box. 170, initial escrow deposit or buy-down fund. 173, non-coupon payment, or aka cash money tendered. On PHH's account activity statement, there is an entry code under 170 on March 4, 2010 of $1,754. There are 3 entries under code 173. 2 on April 13, 2010, and 1 on May 7, 2010. These entries total $16,577. The code 173 only appears these 3 times after PHH Mortgage Services began servicing the loan in February of 2010. The code 170 appears 2 additional times. On April 16, 2010, $70 appears in suspense and then is applied to escrow under code 170. This $70 assumedly represents the $67.73 in suspense in the J.P. Morgan Chase account on January 21, 2010. And on March 3, 2015, an 88-cent entry appears under code 170 and is immediately reversed. On March 4, 2010, $1,754 magically appears in the escrow balance. Code 170 identifies an escrow deposit, presumably from surplus escrow monies transferred to PHH Mortgage Services when PHH Mortgage Services began servicing our loan. We were told by JP Morgan Chase prior to this transfer taking place we had $7,000 available in escrow. In PHH's account activity statement on April 13, 2010, $8,593.93 magically appears in the suspense balance labeled as a non-coupon payment. This number first appears on April 1, 2010 under a code which means escrow to mortgagee. Again, this identifies money left over in an account. On April 13, 2010, $1,116 magically appears as a non-coupon payment. Code 173, aka cash or money tendered. On May 7, 2010, $6,867.07 magically appears as a non-coupon payment. Code 173, or aka cash or money tendered. PHH Mortgage Services has admitted they did not allow us to make any payments from the time they began servicing our loan in February of 2010. Therefore, these funds were presumably held by JP Morgan Chase and not given to PHH Mortgage Services or not applied by PHH Mortgage Services until the dates indicated. These four payments equal $18,331. Based upon the payments illustrated in Chart 3 and the documentation referenced, Chart 4 illustrates all funds due to be tendered between November 2007 and January 2010 were paid. As stated, PHH Mortgage Services has admitted they refused all offers of payment beginning in February of 2010. Since they refused to work with us or research account errors that new evidence irrefutably demonstrates were clearly in existence, we cannot be held in default for any payment from February 2010 to present. As the legal maxim states, money refused releases the debtor. Therefore, based upon a total owed of $60,058 as shown in Chart 2, and the total paid illustrated in Chart 4, PHH Mortgage Services owes the Nickersons a refund of $1,985.73. Even if you subtract the $1,980.65 discussed previously to humor the bank's false claim, a refund of $5.08 is due. A true and accurate accounting projects this figure to be much higher. Additional proof amounts under Code 173 or money tendered can be found in the PHH account activity statement and Chase Home Finance loan history. On June 25, 2007, a payment of principal, interest, and escrow totaling $2,163.54 is made under Code 173. On November 11th of 2009, $20 is received under Code 173 as a Chase FastPay fee. On December 11th of 2009, $20 is received under Code 173 as a Chase FastPay fee. On January 13th of 2010, a payment of $395.63 principal, $1,364.73 interest, and $568.63 escrow is paid. The Chase payment history spreadsheet confirms this payment occurred on this date and the amount is pulled from suspense. This payment was made under Code 173. On January 21st of 2010, $20 is received under Code 173 as a Chase FastPay fee. On page 44969 of the Chase Home Finance loan history, there are two more entries under 170 and two under 173 in July of 2010 that do not make a whole lot of sense. However, they demonstrate monies tendered and a flow of funds into and out of suspense, which is in our favor, not the bank's. Since the entries are unclear, we did not include them in the monies owed us on refund. In Section 1, Paragraph 2 of the alleged mortgage, it states the following. Lender may hold such unapplied funds until borrower makes payment to bring the loan current. If borrower does not do so within a reasonable period of time, lender shall either apply such funds or return them to borrower. If not applied earlier, such funds will be applied to the outstanding principal balance under the note immediately prior to foreclosure. As shown above and demonstrated in the PHH account activity statement, PHH Mortgage Services and JP Morgan Chase held $18,331 and in violation of the alleged contract failed to apply it to the loan, which would have brought the loan current, or to the principal balance prior to foreclosure. This is illegal, immoral, breaches the alleged contract, fails to mitigate damages, and fatally fails to meet contractual and statutory conditions precedent prior to initiating foreclosure. No default exists or existed. This summary statement is new evidence received by us after the sheriff's sale had occurred. This summary statement reflects transactions spanning from November 7, 2007 through June 16, 2009. This summary statement presents transactions that are not recorded in other account histories provided by JP Morgan Chase and PHH Mortgage Services. This corroborates our claims of inaccurate account records, deficient loan processing, falsified credit reporting, abusive debt collection, and malicious prosecution. Conforming these records post-foreclosure and years after the transactions occurred confirms fraudulent acts and demonstrates intent to conceal and deceive. Further, not presenting these errors to the court upon discovery is in violation of rule and law, adversely impacts all summary judgments, and allows undue injury to continue to accrue based on known false claims. These transactions are illustrated in Chart 5. These large transactions equal a total amount of $33,446.86, or a total amount of $16,723.43. Additional discovery and argument will address these transactions. The purpose of this illustration is to show there are still genuine issues that prove no default existed when PHH Mortgage Services began servicing our loan in February of 2010, and that our requests for access to our account records are well-founded and reasonable by law, regulation, and necessity. For the sake of argument, if these large unexplained transactions are counted only once per amount, the amount of $16,723.43 is $378.16 more than what was due to be paid according to Chart 3. Chart 6 illustrates this point. In all fairness, these transactions should be counted twice, as they are in the transaction record, and if applied, PHH Mortgage Services or JP Morgan Chase owes us a refund of $17,101.59. Chart 7 illustrates this point. This new evidence was received after the sheriff's sale had occurred. This loan history contains evidence corroborating transactions under Code 173 or payments as discussed above. This loan history also corroborates our payments were current and on time in January of 2010, and that there were accounting errors present in JP Morgan Chase's records relied upon by PHH Mortgage Services to secure foreclosure. On the bottom of pages 38849 and 44969 of the Chase Home Finance loan history, there are letter code definitions. The code L is defined L equals PD through date. It is logical to assume that this stands for paid through date, also known as current as of this date. Payment entries on the following dates correspond to the amounts tendered in the Chase Payment History spreadsheet, have the L code with them, and demonstrate we were current on the loan as of this time. On pages 38847 through 38849 of the Chase Home Finance loan history, payments made on September 2nd, October 3rd, November 11th, and December 11th of 2009 all have the L code. On pages 44967 and 44968 of the Chase Home Finance loan history, payments made on January 13th and January 21st of 2010 have the L code. Note, the L code for the 113 payment shows 1/12/10 as the paid through date. This L code, meaning paid through date, present on monthly payments recorded from September of 2009 through January of 2010, demonstrates we were on time and in good standing with our payments in January of 2010. Once again, the evidence demonstrates we did not default, and PHH Mortgage Services' claims against our family are completely baseless. A review of the escrow balances between Chase Payment History spreadsheet and previous claims made by PHH Mortgage Services will show there is a severe discrepancy in the handling of escrow by JP Morgan Chase. PHH Mortgage Services and JP Morgan Chase originally claimed a positive escrow of $3,391.90 in escrow on July 21, 2009, while the new Chase Payment History spreadsheet shows a negative balance of $3,613.77, a difference of $7,005.67. What is very interesting about this $7,005.67 figure is JP Morgan Chase claims to have negative escrow balance of this amount of money on January 21, 2010, while JP Morgan Chase and PHH Mortgage Services previously claimed the escrow account zeroed out on this date. JP Morgan Chase then miraculously transfers PHH Mortgage Services a positive $7,005.67 in escrow on February 5, 2010, as illustrated on Chase Payment History spreadsheet, but not reflected in PHH's account activity statement. Another fact to note about this amount of money in escrow is JP Morgan Chase communicated to us just prior to PHH Mortgage Services becoming the servicer that we had $7,000 in escrow. Another important issue regarding the escrow presented in the Chase payment history spreadsheet and previous claims by PHH Mortgage Services and JP Morgan Chase is a transaction of $2,870 occurring on November 21, 2009. This transaction is identified as homeowners insurance. This transaction was fraudulently and illegally pulled from escrow as the alleged contract specifically requires this item to be added to the principal balance. Section 5, paragraph 2 of the alleged contract states in part, if borrower fails to maintain any of the coverages described above, lender may obtain insurance coverage at lender's option and borrower's expense. Any amounts disbursed by lender under this Section 5 shall become additional debt of borrower secured by this security instrument. These amounts shall bear interest at the note rate from the date of disbursement and shall be payable with such interest upon notice from lender to borrower requesting payment. PHH Mortgage Services and JP Morgan Chase previously showed a positive escrow balance of $340.01 after the insurance amount was pulled, while the Chase payment history spreadsheet shows a negative balance of $6,665.66. This homeowner's insurance was illegally placed and was later canceled. This $2,870 charge should have been applied to payments on the loan and is illustrated as being applied in Chart 3. As stated previously, additional force-placed insurance policies were purchased for prices ranging from $2,400 to $3,600 that are not reflected on the account history provided by JP Morgan Chase and PHH Mortgage Services. Since the servicer was aware we maintained continuous insurance coverage, this represents abusive debt collection and serious escrow violations. Despite our previous agreements, Coldwell Banker Mortgage refused to cancel the PMI fees once we met the cancellation threshold a few months after purchasing our property. They informed us we would have to continue to pay PMI for 2 years and later threatened it would cost more to fight them in court to get PMI removed than it would cost to just pay it. When servicing was transferred to Chase Home Finance in 2007, we requested they cancel the PMI. We provided an appraisal demonstrating the property value was several times more than the loan amount, and PMI was no longer appropriate or legally required. We believe this notification our property had considerable equity is one of the reasons JP Morgan Chase and PHH Mortgage Services targeted our family. Our first PMI payment was due and paid in December of 2002, and we paid through January of 2010. PMI should have been canceled within months of closing. This represents $16,136.18 in unfair monies collected over the years. However, even if you followed the 2-year rule they cited, which was never validated, we paid an additional $11,633.06 in PMI over the years we should not have been required to pay. No default, abusive debt collection, and predatory lending. It is our firm conviction that the account records produced by JP Morgan Chase and PHH Mortgage Services do not represent the true, accurate, and factual occurrences of payments tendered to JP Morgan Chase. Certainly, they do not reflect the extreme efforts we expended in requiring JP Morgan Chase to accept our monies tendered. Nevertheless, an accurate reading of the monies tendered on the new evidence in this video still demonstrate we did not default, and all monies due to be paid from November of 2007 through January 2010 were paid. We cannot legally be held in default for any payments from February of 2010 to present, as PHH Mortgage Services has admitted they would not allow us to make any payments and refuse to work with us in any way to resolve the alleged default or research account errors. The Chase Home Finance History Summary Statement also demonstrates there were funds not accounted for by JP Morgan Chase in the Chase Payment History spreadsheet, and the Chase Home Finance loan history indicates JP Morgan Chase reported payments from September 2009 through January 2010 as current. PHH Mortgage Services and JP Morgan Chase have systematically refused to allow us access to the original, accurate, unedited, and unabridged account records, notations, and tape recordings we know exist and participated in the creation of. We requested the court acknowledge this notice of no default and grant us relief from the unlawful and fraudulent actions of PHH Mortgage Services by vacating all judgments of foreclosure, reversing and voiding the sheriff's sale, sheriff's certificate of sale, and sheriff's deed, dismissing PHH Mortgage Services ejectment action with prejudice, Save Our Ranch, and compel PHH Mortgage Services and JP Morgan Chase to immediately produce all account records, notations, tape recordings, contact information for employees who participate in their creation, and all other relevant documentation regarding our accounts in their original, unedited, unabridged, and unaltered form, whether under the control of them, their agents, subsidiaries, DBAs, or third-party providers, so our good name can be cleared and the court and the world at large could see once and for all the inconceivable extent of the abuse and victimization we have suffered at the hands of these mortgage terrorists. Judge Gregory Fitzmaurice of Grangeville, Idaho, refused.